Let's take it over to CME Group now for today's market movers with easy to follow futures and options trades.
Welcome to Market Movers. I'm Jim Iurio, and today we're looking at upcoming elections in Italy and the recent changes to the German political landscape. We'll be looking at using euro currency and gold options as a way to hedge risks associated with these events. Joining me is Chief Investment Officer of Kingsview Asset Management, Scott Martin.
Hi, Jim.
Okay, so the Italians move more toward more nationalism, maybe even fascism if you talk to somebody, juxtaposed against Germany's coalition government gives Angela Merkel more stability,
Control,
more power.
sure, yeah.
Do you think these two things matter, one, or do they balance each other out?
They do matter. Now, how much they matter, I think, is going to be given away in what happens, obviously, in the elections. Yes, I mean, surprise, surprise. But also in some of the risk assets, whether you look at German bonds or you look at, say, gold or other, say, currencies like 60 euro. Those are going to be the tells, in my opinion, as they have been in events like these in the past, if those things, as far as the elections, are things to really worry about.
Okay, the euro's traded off a little bit over the last couple weeks. Is that because of any of these things, or is it because of something else?
Well, the euro's rallied nicely in the last few months, so that could be just general pullback. Plus, we had Jerome Powell step in, and depending on how you read the commentary, of which I've read it probably 5 different times, you could say he's hawkish or dovish. So it probably could be the trade coming back into itself, but you will see tells in some of those risk assets or risk-off assets as these things come closer into perspective.
Now, before we dive into our trade discussion, I'd like to point out that as with all market movers, it's important to view these trades as examples that allow you to see different ways to use futures and options products to either manage risk or create additional trade opportunities, not as recommendations or advice. Price and movements vary. The one I'm talking about is going to be the euro currency. The June contract was trading 123.10 at the time. Scott's going to talk about gold, which is interesting to me because gold doesn't seem to think these things are important.
It doesn't. And you know what's so funny about gold, Jimmy, is that gold at times has acted like that risk-off asset, and other times it frankly is not. And so that's what's, I guess, fun about this trade expression today. But I think it's at times like Brexit too, where going into Brexit there were what me worry and all the risk-off assets were trading like nothing was going to happen, and then you know what happened. So specifically, I thought gold would be an interesting one to look at today. So specifically, Jim, I was looking at buying the week 4 gold 1330, 1340 call spread. This will cost you 4 ticks to put on, or about $400. It expires March 23rd. So note that it's the April contract, expires March 23rd. Now this trade risks $400 to put on to make potential $600 if the call spread fills out. Now the reason that I picked this is, besides the fact that we've been talking about gold as the risk on or risk off asset, is the fact, Jim, that to me something could happen. So that's obviously typically a good reason to have some GC on. But also, if you just look at the range in GC in the last few months, it's kind of been in that mid 1300s range. We're already down to kind of the bottom of that range where I think there's likely to come some buyers in anyway. So to me, looking at a call spread here with a reasonable risk reward on it looks like a good thing to do.
I like it because I look at it in the way you mentioned before going into Brexit, and nobody thought anything could happen, and it did. This, of course, wouldn't be as big a deal as that if something weird happened in the elections, but it could be enough to push gold, so I like it. Now, I'm looking at the euro. Now, the euro's come off a little bit. We said before, maybe it's just because we're tightening here, or maybe people are worried about things that are going on there. Either way, it's come off a little bit, and I think this creates an opportunity because we are now more worried about things happening in elections and in events than we were before, and perhaps we are too much. So I'm looking at buying the week 4 euro currency, 6E, the 124, 125 call spread for 30 ticks. This risks the $375 you pay to make a potential $875. Expires March 23rd. The June underlying is a 123.10 on it right now. Thoughts?
So it's interesting, and when you're talking about this trade, I was thinking, okay, we're talking about maybe risk here, maybe some risk aversion, and therefore we'd be trying to get away from the currency. But in reality, you're expressing yourself a little bit more on this, say, bullish side, right, which is interesting to think about because that could actually be the right way to look at things, especially if things work out as planned, right, and therefore the currency gets a little bit of a boost.
So to be clear, you agree that these are fairly opposite trades. If something bad happens in the election or unexpected happens in the election, the gold trail will make money. If it goes off without a hitch and what's expected happens, my trade could make money.
I believe so.
Yeah, okay. Now, thank you for joining us on Market Movers. I'm Jim Iurio, where we're hoping to make you a better trader.
Check out businessfirstam.com to find out where to see our entire show. And don't forget to like, follow, and share Business First AM.